When you think of Marico, you probably think of one thing: coconut oil. But that's the old story. The company has been pulling off a massive transformation, really right under our noses. So today, we're going to break down how Marico is shifting gears and pivoting hard into digital and health.
So let's get right into it. What's the core idea here? Well, it's all about a deliberate move away from those legacy brands and building a whole new foundation for growth.
And this chart, wow, it tells you everything you need to know. Look at that. Marico is absolutely not just the coconut oil company anymore. You can literally see the reliance on Parachute shrinking as this much more diversified portfolio just takes over. And here's the kicker. This strategy is working. We're talking about a massive 41% return on equity. That's a huge indicator of profitability, and it's what's fueling their strong growth right here at home.
And let's be clear, this isn't just some small side project. This is a fundamental shift in the business. The health and beauty segment is already a 2,000 crore portfolio, and as you can see, it's growing 1.5 times faster than the traditional market. This is exactly where Marico's putting its money, buying up companies like Cosmix and SkinnyDick to really build out this wellness empire.
Okay, so that's the strategy. Now what's the bull case? Why are some investors so excited about Marico's future? Let's dig into the key growth drivers.
All right, one of the biggest factors, a real tailwind, is the comeback in rural demand. For the first time in 3 whole years, rural growth is actually beating urban growth. Now, why does that matter so much for Marico? Well, a huge chunk of their customers live in rural India. So with good monsoons and more government spending, people just have more money in their pockets, and that flows directly to Marico's sales. It's as simple as that.
And here's the other crucial piece of the puzzle. Marico has built this incredibly powerful new engine for growth. We're talking about their digital-first brands, like Beardo and Plix. They've just crossed the Rs 1,000 crore mark in annualized revenue. That's a huge milestone, and they're just getting started. The goal? A 2.5 times expansion by fiscal year 27. That is some serious ambition.
Now this slide, this is a masterclass in what we call pricing power. Just imagine this. Marico gets hit with an insane 84% jump in the cost of copra, their key ingredient. What do? They pass on a massive 51% price hike. Now, you'd think sales would just fall off a cliff, right? Nope, they only dipped by a tiny 1%. This allowed them to completely protect their profits. That right there is the power of having a brand that people trust and want, no matter what. And hey, don't sleep on Marico's international business. It's kind of their secret weapon, a silent compounder. I mean, look at Bangladesh. It delivered a rock-solid 29% growth, even with all the economic chaos happening there. When you add that to stable, high-margin businesses in places like Vietnam, you get this really important diversification. It protects the whole company if one market slows down.
But okay, let's be real. It's not all a walk in the park. Every investment has risks, and you have to look at both sides. So let's flip the coin and talk about the bear case.
The biggest, most glaring red flag for Marico right now is its valuation. The stock is trading at a price-to-earnings ratio of 58. That means investors are paying 58 rupees for every 1 rupee of the company's annual earnings. As you can see, that is way above its own history and what's typical for the sector. A valuation this high is like walking a tightrope. There is zero, and I mean zero, room for any mistakes.
And the competition is just brutal. Marico is basically fighting a war on all fronts. You've got the big giants like ITC and Tata muscling into their healthy foods territory. Then you have this whole swarm of new, agile, direct-to-consumer startups chipping away at their premium personal care business. On top of all that, you can't ignore the geopolitical risks in a key market like Bangladesh. It is a tough market out there.
So you have these strong growth drivers on one side, and some pretty serious risks on the other. How does Marico plan to navigate all of this? Well, let's look at their big roadmap for the future.
The CEO, Saugata Gupta, has put a huge target out there for 2030, and it is a big one. Rs 20,000 crore in revenue. To even get close to that number, they're going to have to keep up a relentless pace of double-digit growth year after year for the rest of the decade. It's incredibly ambitious.
So it all comes down to this, doesn't it? Marico has absolutely reinvented itself. They've built this new growth engine that looks really promising, but the market knows this, and a lot of that future success is already baked into the stock price. So the big question for any investor is, can they keep executing perfectly in a market that's getting more crowded by the day? The answer to that is what will make this stock a huge winner or a disappointment. It's a high-stakes bet for sure.